So how do you trade in Europe's brave new world? Well, the weekend's elections causing investors to rethink their plans in Europe and here in the U.S. Adam just gave a great breakdown of what we could see in Europe. Well, we're lucky to have Hans Humes. He's the president of hedge fund Greylock Capital Management. Hans is a member of a committee of private bondholders that negotiated the swap with the Greek government officials earlier this year. Plus, still with us is our guest for the hour, Savita Subramanian, head of equity and quantitative strategy at Bank of America Merrill Lynch. But Hans, let me start with you. After what we saw over the weekend, is it back to the drawing board here?
I don't know if you're talking about Greece specifically or Europe in general. Well,
let's take Greece first, specifically. Is it back to the drawing board here in terms of their debt, in terms of the agreements that they've put together? I mean, are we at a reset mode here again with Greece?
I think we were actually a bit surprised that there wasn't going to be enough support for the European supporters politically, because the man on the street still wants to stay in the euro. But the sort of the fraction and the rise of sort of fringe parties, that's sort of to be expected post-crisis. I mean, if you take a look at a country like Argentina, when they hit their crisis in 2001, they went through 5 governments. So this kind of split vote without a consensus for support or not support, some support for neo-Nazi parties, some support for communist parties.
In a way, you're saying it's par for the course?
Yeah, to some extent. So I think what we'll see is probably another election, and then there'll be a clearer view of where the Greek population wants to go. In terms of a reset, I don't think so. I mean, there are agreements in place, and I think that once there is some kind of a coalition government, there's really no way that they can't engage with the Europeans. Otherwise, they're going to cut themselves loose without a lifeline. Now, are there going to be modifications to some of the agreements they have in place with Europe? I wouldn't be surprised. I mean, given Hollande's victory in France, I think the whole debate of austerity versus a little bit of spending is going to resurface. And from my point of view, having gone through the negotiations with the Greeks and then with the Europeans in the background, I don't think that's a bad conversation to have. This real strong imposition of austerity, it's not clear that that's going to be able to generate the growth that these peripheral countries are going to need.
If they spend more money, however, whether it's in France, whether it's in Greece, that also suggests that you're going to have some sort of inflation and bonds probably trade off.
Yeah. Question is, what kind of inflation can you expect to see in the Eurozone? I mean, there's this paranoia about inflation among the Germans, and that's really sort of dictated a lot of the tone of the negotiations. And there's a balancing act. I mean, we've got the debate here in the United States. You've got Krugman on one hand, sort of saying, listen, we should inject more liquidity, spend more. And the balance between unemployment and inflation is always that kind of tough fight that you want to have. And in the case of Europe, if you look across the Eurozone in general, you've got an unemployment rate that's about 11%. You look at the peripheral countries, it's well north of 20. And, I think that's the solution that they're going to have to strive for. How do you balance that off? In the same way, we have states in the United States that have much higher unemployment, pockets of unemployment, pockets of growth, pockets of inflation. How does Europe address that?
Let me, Hans and Savita, let me just play for you an interview that we did earlier on my program with Barton Biggs, the hedge fund manager. This is what he had to say about Europe.
I'm not sure if Europe is going to make it and if the euro is going to survive, but I think this change of heart and that the people of Europe are really speaking here that they want more stimulus is a good thing.
So he's saying this might not be, he's taking it not so negatively, and it's not so different from what you just said, whereas, you're not so sure that not having this dialogue is a bad thing in a way. I mean, it might actually be a good thing to start having some more dialogue, right?
Personally, yes, I think that there should be a dialogue, and I think that the insistence on austerity that the Germans have been bringing to the table needs to be offset in some way. And the elections in France, I mean, is Hollande a perfect president for the country? And I think any of us in the United States can sort of look at what happened with Mitterrand and say no. On the other hand, Hollande seems to be pretty pragmatic. And after, I mean, quite honestly, I was a little concerned going into the weekend with some of the statements by Wolfgang Schäuble about, that Hollande might be able to save face would actually really poison the dialogue. But there seems to be already lines of communication that were set in place before the weekend. So I'm relatively constructive on the bipartisan actions of France and Germany going forward.
And Savita, from the U.S. Investment perspective, we've talked a little bit about this, but what in Europe could be done that would affect U.S. investors here? I mean, we know the macro environment, the concerns about the possible double dip recession. Right. But what could be done to actually perhaps maybe even drive this rally higher?
Prop up markets. I actually think that the U.S. is discounting more bad news than what we're really seeing. And the reason I say this is if you look at this most recent earnings season, the stocks that have surprised the most on the upside have been stocks that have the highest European exposure. So at some level, I think analysts already kind of took down their numbers enough to reflect the potential risk in Europe. I mean, our expectations are that we see a mild recession in Europe. If the recession is a lot worse, then, I think that could negatively impact the U.S. equity market. It could turn into a full-blown global recession, but that's not our base case assumption at this point.
Hans, last night, U.S. futures down 150 points. We finished, well, only down 30 today. S&P is flat. But France and Europe in general up about 1.5%. You surprised by that today?
I'd like to say I wasn't, but I'll be honest, I actually spent a little bit more time than I wanted to checking the news until about 1 or 2 in the morning. And, clearly with the behavior of the Asian markets, there's a bit of concern. Were they reacting to our data or to what happened in Europe? And I think the resilience of the European markets is actually a pretty good sign. And I think that maybe you're right, that the bad news has been discounted. We've seen this election in France coming from quite a ways away, and therefore you might be a little bit more optimistic that the investor community is actually doing its homework and saying, okay, these headlines might shock us, but is that really going to, are we looking at going off a cliff? And I think the consensus is no.
Is it also possible that Hollande will, in effect, soften his language? He was saying that the banks were going to be his enemy. Is it possible he's going to soften that kind of language?
I don't know if you've noticed, but politicians will say one thing to get elected.
Really?
And very often when they get elected, they do something else. Hollande he's a pragmatist. I mean, I think if I was watching some news reports on him, he positioned himself extremely well to run for president and then ran a very good campaign to win. My sense is he does not want to knock France out of the key position it has within Europe right now. So our sense is he'll probably put the tax on the ultra-wealthy that he's been promising, and virtually nothing else will get implemented. Now, that may be a brash statement, but my sense is this is not going to be nearly as dire.
And what about a socialist agenda? Because, technically, socialists believe in the government owning the means of production, right? So a Total, for example, or the French banks.
Yeah.
Listen, we all in the developed countries had to nationalize a few financial institutions in the back of 2008. So, but I think to think that Hollande is going to do anything like Mitterrand did, I mean, he worked under Mitterrand. He saw what happened when Mitterrand did that wholesale nationalization and how much he had to backpedal and then actually start implementing a pretty, standard economic policy. So my sense is that the socialist agenda is unlikely.
Hans, there are now increasing bets that Greece may have to be kicked out of the euro. Do you see that as a likely scenario?
It's an interesting thing because if you look at some of the graphs that Adam was showing, it's pretty evident where the problems are. It's not just Greece. You can also look at Portugal. And the economies that are in the worst shape are actually very small. And Europe can hold them in pretty well. If Greece gets pushed out of the euro, it's either going to be because of a decision of the Greek population or just the rest of the Europeans saying we can't deal with this anymore. I think either case doesn't have to be catastrophic. And from our vantage point as investors, maybe we just are a little too drawn to problem situations. But when you've seen markets where there has been selling for years, that's usually where you can find the best bargains. So we're actually spending a lot of time taking a look at the opportunities in Greece. To some extent, you've seen the capitulation trades already, and there's some really attractive investment opportunities there. I don't really know what happens with Greece and the euro. I think that what Citibank is saying, 50 to 75% likelihood.
Yeah,
probably
75%. Yeah.
Well, they gave a range. It's probably not unlikely. I would say personally, 2 years ago, I thought that Greece getting pushed out of the euro is more likely than I think it is now. But
you thought there was a better chance 2 years ago.
I thought it was a foregone conclusion just because of the raw numbers. But there seems to be a recognition the European decision-making process was not well prepared for a crisis. They've had to learn on the fly, but they are learning. And I think that pushing Greece out of the euro is not going to be done haphazardly. It'll be done in a well-thought-out way, in a way that won't impact the rest of the region, if it happens.
Hans Humes, thank you for joining us.